All right, guys, how's everyone doing? Give me a little shout out here just to make sure everything's good. I had a little trouble getting in here. That's why it took a little longer, but looks like we're all good. And okay, looks like you can hear me and see me. Okay, give me a little shout out here. What's going on, Andrew, Michael, Chris, Justin, Brian? How's everyone doing? Um, Pretty interesting market today. We're going to talk all about trading. This bear market, coronavirus, focus on bear market, not necessarily coronavirus, but I've been through this before, so I know what to do. I know a lot of you, this is your first time, or a lot of you with me were with me back in late 2018, and we went kind of through a mini version of this, which was scary at the time, but feels like nothing compared to what's going on right now. So we're going to talk all about that. You guys probably all have a good feel already because we talk about this stuff in the report almost every day. And I know most of you guys are following me on Twitter and Instagram as well, and we talk about it there too. So I've been actually really happy with what I've been seeing from you guys, at least those of you who post in the chat room here. It seems like a lot of you are doing really well, and that's fantastic. And if you don't post, start posting in here. It's good to talk to other people, and it's good for me to see how you guys are doing or what's on your guys' minds. But it's been really interesting to see through this that very few of you that I've seen have gotten hit very hard, and that's fantastic because most people are. With the market down over 20%, this crazy volatile market, most people are losing and losing big. And we're not just talking about retail traders like us. We're talking about the pros. One of my idols is Ray Dalio. I know he hasn't had the greatest last 2 years, but he's a legend in terms of what he's done over the last 30 years. And that guy is down 20%. And that was like a week ago. He's probably down more now. And hedge funds are getting crushed. Pros are getting crushed. And here we are, a little frustrating to say, oh, I'm, up essentially break even. Here you can see our bull stats here, essentially break even. But if you are breaking even, that is fantastic. That means your alpha is 20% or even more now. However, the market was down 20% yesterday, down another 5 today. The market might be down, what, 24% now? But so your alpha is like 24% if you're break even right now. And then every point you're winning is above that. So Jason here, wow, Jason's up $4,500 last 2 weeks, so crushing it. So that is fantastic. Let's see here, who else is in here? Dan, Jason, John, Ernie, Michael, Gabriel, what's going on? I think you're a new member here. If you're, even if you're down 10%, you're actually doing really good. So stay positive. I think most of us here have a lot of reason to be positive right now. Let me ask you guys, we'll wait a few minutes for everyone to get in. How many of you guys are at home for the first time, like for extended period of time, where you can just watch the market all day or, do what you want? I know you probably have some work to do too if you're working from home, but a lot of you are in this new spot where you don't get to watch the market all day usually at your job, and here you are working from home first time, get to watch the market all day. It happened to me when I went full time back in 2012, and it was an interesting experience in that at first I did some things I shouldn't have been doing, in the sense that I just started watching ticks every day, got faked out a lot of stuff, started turning swings into day trades and all that kind of good stuff. You guys might be in that spot right now. Be very careful. Be very, very careful about doing that. All right, we'll wait a few more minutes. In the meantime, most of you guys know I read a book a week. It's not hard to do. If you just dedicate a half hour to an hour every day, you can easily read a book a week. One of my favorite books ever is, and it's really pertinent right now, is The Science of Fear by Daniel Gardner. So if you get a chance, if you're looking for something to read, I would definitely read this book here. Obviously, in the times we are right now, there's a lot of good stuff here that will be helpful. It's basically about how our minds are wired incorrectly. We're wired to be kind of in the Stone Ages, but times are very different, and the stuff that really worked for us back then doesn't work now. I like this line here: an expert guide to how and why we make bad decisions. And we need to be making good decisions right now, not only in trading, but in life. So Really good book. If you're looking for something to read, highly recommend this book. One of my, if I had to list maybe 5 books, 5 of my favorite books that I would recommend to anybody, this is it, Science of Fear. All right, okay guys, so let's get into the kind of lesson for today, which is gonna be the bear market coronavirus playbook. I'm gonna go over some stuff here. We're gonna talk about, what's going on right now, look at some past bear markets and some of the stocks we're looking at, how to potentially play this stuff, which, by listening to the reports, I think you guys have a general idea now, but we're gonna lay it all out in kind of a nice framework here. And then we're gonna do our usual mentorship Q&A, and I'm sure a lot of it is gonna be focused on the market right now. And if you have any questions about working from home now, ask me, because I've been doing this for years now, so I know all about it. And those of you who also have kids at home right now because school has been canceled, I know we're focused on stocks, but I can talk about that too, because I have 2 daughters. One I've been homeschooling, so I know all about what to do when your kid is at home, and the other one is not homeschooled, but obviously is at home now. All right, let's get to it. I think everyone's in now. We have an amazing turnout here. I guess probably because a lot of you are working from home right now. But let's talk about what to do in this coronavirus bear market environment. So, number one, this is really important, and that is to trade infrequently. As you've seen now in the report, we're trading probably with the least frequency that you've seen me trade in a very long time. And that's on purpose. Here, there's a couple of things to do here. One, you wait for really strong signals, or 2, you take very small shots, because there are so many different fake outs. And you can see that right here. We've had 1, 2, 3, we're on our 4th fake out right now. So you have to take small shots. It's good to take those shots because you never really truly know which one is the real deal. And people who say they know, they don't. You really don't know, especially in the environment right now, which is a little different in that no one can predict what the nightly news is going to be related to this stuff, and it's usually going to be pretty bad. So because of that, even technical patterns that are slam dunks are not really slam dunks anymore. Yesterday's hammer here, in a normal environment, even in a bad environment, this is a slam dunk entry where I would have been getting super aggressive. In it, like say 2018, I would have taken maybe 4 or 5 positions right here. And of course, we took 2 positions, and the SPXL was normal sized and the ZM was half size. So I think SPXL was a little less than normal size. I adjusted it this morning to normal size. So really, we were risking about 1.5% of total. So almost like one big position. Whereas normally I would be risking, 5, 7% on something this strong. And we just can't do that right now. So number one, trading frequently, and I should also add here, trade smaller. Really important. Outside of this, you also have to, think about making good decisions. Don't look at every tick in the market. We've been talking about this. A lot of intraday fakeouts, and all the intraday stuff is fantastic for day trading. So if you are trading intraday, there's a lot of opportunity with these intraday moves. So that's fine. If you're new to watching the market intraday and you're just working from home right now, I probably would stay away from doing that. But you up the frequency with your day trading, you decrease the frequency with your swing trading, and just wait for really good signals or spots where you can take small shots. Also, don't stress over this stuff. That doesn't help. Stay positive. It's not really as bad as it seems. And as you're going to see from some of the charts we're going to go through, when times look horrible, we always come out of it fine. So that's point number one. Point number two, beat the market. That's an order. Beat the market. I know it sounds silly writing that there, but we want to beat the market. And if we know what we're doing, it's not hard to do. One, we're going to trade smaller in terms of how. We're going to wait for the really good signals. So basically, we're going to take little losses, and then when we hit, we're going to really hit. So that's number one in how we beat the market. We trade infrequently. And when I say trading infrequently, if you're all in cash through this whole period, you're automatically beating the market, right? If you stop trading right here and the market goes down another 15%, your alpha is 15%. You're beating the market. So trading infrequently already puts you in that spot. And then think about what happens. At some point, we all know there is going to be an amazing opportunity. We're talking like a once in a decade type opportunity. So we want to be ready for that. You don't have to catch the bottom on these things. As you're going to see with some of the historical charts, the bottom might come in July and you might not trade till December aggressively. It doesn't matter. This stuff will play out over a long period of time because we're beaten down so much, and it will take a long time to get back up to where we once were. There is going to be a lot of opportunity in between. I mean, think about it. USO is at 5. Oil is at 5. I would be willing to bet anything that within 10 years, oil is going to be way higher than 5, unless we don't use oil anymore. But the point being, a lot of this stuff, they're at historically great levels to be entering. We can't enter them right now for swings, but there's going to be amazing opportunity here. Just be patient. And then we also have 3 different setups that are really going to help us beat the market if we know how to trade them and trade them correctly. Just let me get an idea here. How many of you guys are familiar with these setups? We talk about them in the report, but I'm going to lay them out here. And I think I go over all this stuff in the advanced swing bootcamp. And by the way, let me just go over that really quick here. And I think my questions might have frozen up. Can you guys start typing some stuff in the question box here? I just want to make sure this thing hasn't frozen up. But 3 different setups here, and let me know if you, okay, it's popping up here. Sounds like a number of you know these setups. What was I talking about? Okay, we're gonna go over these setups here. Let's go over them. Point number 1, or setup number 1, is the rubber band bounce setup. And for this setup, we're going to do one of my famous ugly drawings here, but I think it should give you a good idea of what we're looking at. Rubber band setup is basically a stock, a market, whatever it is, that is extremely beaten down. And if we have a stock, like say, had been going up like this, now it's been coming down, and we have large candles. This isn't like, we're not talking about trends here. We're not talking about something that has stair-stepped down. And then we trade what you guys should be very familiar with, because I do a lot of bottoming formations. And then we trade like a bottoming formation here. That time may come later on when we talk about there's going to be amazing opportunity later. At some point when this all ends, there are going to be bottoming formations all over the place that will take time to develop, but they'll develop. But that's not what we're talking about right now. Right now, we're talking about stuff that is just going practically straight down. Maybe you have little consolidations in between, but for the most part, they're pretty much going straight down. The slope is not like this. The slope is like this. That's what we're looking for. We start to see very volatile red candles on the way down. And then at some point at these extended levels, we get a reversal candle. And you guys should be you should be familiar with these reversal candles. If you're not, that's what I was going to say. If you guys haven't done this already, and I was surprised some of you guys don't know you have access to this stuff, but go to the Swing page, and you'll have a spot that says My Accounts, and whatever you have access to. Kevin always pops up here. He's a big Detroit Lions fan, by the way. Swing Trading chat room here. You're going to click on this, and this is going to give you access to everything. Watch the advanced swing classes and watch all of our past mentorship sessions whenever you have the chance. But let's go back to here. Rubber band setup. Looking for something very extended. And then you can trade this in one of 2 ways. If you want to be aggressive, which is a little tough to do in this market right now, so maybe you want confirmation. But as you can see here, we have been taking little shots because at some point, one of these is going to work, and it's going to work big, because these bounces in bear markets are really powerful. I mean, think about it. You can just get like a 20% retracement here, And that is a huge move, bigger than moves that you get in uptrending markets, just by getting a little, 20% retracement. So you can either take a shot on the reversal candle, something like a hammer. If you're doing a 2-day candle, maybe something like a bullish engulfing, which would be like this, an ugly red candle, followed by a big reversal candle here, or sometimes a piercing one, where it doesn't go all the way down, but into the candle, but closes above. That would be a reversal also. Evening star pattern is like this, where you have a ugly red candle, a gap down, and then a gap up. That is a reversal play also. So you can do one of these, or the 9 is usually going to be trailing like this. And if you're more cautious, you're going to give up a little opportunity, but you can play the break of the 9 EMA as well. And the 9 EMA is important to us. That is our fast moving average. I use 9 EMA for my fast, 50 for my intermediate, and 200 for my long term. And some of you will use 20. That's fine. I don't get the good signals with the 20 that I used to, so I took them off, and I just use the 9 EMA for my fast now. But you can see here, if we see SPXL, this thing is so extended that the 9 is actually pretty far away, but at some point it's going to catch up here, and you could wait for a break of the 9. But this is essentially, we're seeing potential rubber band setups all over the place. Now, my favorite rubber band setups are ones that violate support. So we've talked about that in the chat room quite a bit, where we like it, and it hasn't done that yet. So we haven't got like the slam dunk rubber band setup yet. But if we pull this thing back to 2018, and I've got let me put SPY up here. And so you see the line from 2018. This was the low from this little mini bear market here. And what I would love to see, and we're testing that level now, which is great, is a violation here. Everyone gets scared. Think about what's happening here. Everyone who has entered around here is putting their stops under this level. So a lot of stops will get shaken out as well. And then if we remount that level, that would be a fantastic rubber band setup. So that's what we're looking for right now. And I think we have to take a look at SPXL real quick. So 2619, we're still okay on it. I adjusted, so we're at about the original stop level. We're getting close to it. I adjusted it 1 point. So we're looking at about 19, somewhere in the mid 19s right now, where we would get out of it. So we've still got a point. Hopefully it doesn't happen while we're talking here. But that is the rubber band setup. Now let's talk about the dead cat bounce. I haven't been taking too many of these. We took the SQQ here and it was the SQQQ and the SPXU. So we did it here off 3.9. So that was right here. We took the dead cat bounce. And basically what the dead cat bounce is, it's the opposite of a continuation pattern for longs. So what is the standard play for longs? We watch it go up, it pulls back, and that's our continuation pattern, right? We play all these continuation patterns. We either play it on the pullback or we play the break of the high here. And the dead cat bounce is the exact opposite of that. So we have something going down, and then you get that reflex bounce, and it might even be a nice long setup here. But remember, with rubber band setups, we're not predicting a change in trend. It's just a reflex bounce, and then it might come back down. And if that bounce fails, that's the dead cat bounce. I think they got the name because when a cat falls out of a tree, they bounce and then come back down. And that's kind of the concept here. It's falling out of the tree, it bounces when it hits the ground, but then it's gonna make that next move down. Now, there's a couple of ways to play this. One is you play off the initial failure, and I think that's what we did with those 2 shorts there. But it can be a little tricky here because even the trends that continue sometimes will pull back at a resistance level, and maybe there'll be a little stop gunning, and then they continue. So you might get shaken out here, or you can play the break of this low, which is better in that regard, but you are giving up some risk reward here because you're entering at that lower price. So if you, and it's already gone down some, so there's chance it could bounce here. So there's advantages and disadvantages to each one of these spots here that you take, but still it's a really good setup. And obviously it has worked really well. It is very tough to do right now because we are so extended to the downside. That's why I think it's better to just be in cash right now, even if we continue to slide, um, and look for that bounce play. So those are essentially the two big setups we have. And then finally, what we've done with ZM is basically play relative strength stocks and just enter at spots you think are good, where you have good risk reward, maybe where it's aligning with support, where it's bouncing, whatever. So maybe you're not really a really intricate like tech, with rules kind of setup like we have with dead cat bounce and rubber band setups, but go with relative strength stocks as well. So if you mix in these three setups, you're going to do pretty good. You're probably going to be beating the market. You're either going to be winning, you're going to be break even, or you might be losing a little. And all those three spots are fine. When you're in a bear market, if you're doing one of these three things, you should be really happy with yourself. If you're winning, obviously, if you're break even, and even if you're losing, as long as you're losing, not losing too much. The spot you do not want to be in is when you're getting crushed. And if you do what we're talking about here, you're not going to get crushed. And you adhere to stops and all that stuff. And don't trade too big. You will not get crushed. And that's what we're trying to avoid here. And SPXL continues its slide here, but we've still got some room. Okay, all right. Now let's talk about some of the stocks that we're watching here. Let me take. I just want to look at. I'm trying to watch the market too here. Let's just take a look at Zoom. All right, Zoom is still green on the day, so that's good, and that's fits our relative strength. So let me actually just pull up Zoom. So we traded so far. You saw what we've done in terms of all three setups here. We did the dead cat bounce with SQQQ and SPQU. Yesterday, we did the rubber band setup, which is not working right now, with SPXL. And then we have the relative strength with ZM. So that's all three things we're basically doing in this market. Obviously, relative strength. Obviously, Zoom is a coronavirus type play. A lot of you are working from home. You might be using Zoom right now with your work. But obviously, it's a play on that, showing a lot of relative strength. The way I like to look at relative strength is I ask myself this question. Obviously, there are technical ways to look at it, but you can just eyeball it. And I just say to myself, if I didn't know what was happening in the market right now, would I be able to tell what's going on in the market? And if I looked at Zoom, there's no way I would know that we're in a bear market and the market's getting crushed. Zoom looks like a stock I would always be watching. But then, we see what's actually happening in the market. And obviously we're seeing incredible relative strength there. So, okay, rubber band, dead cat bounce, and relative strength. Okay, now let's just go over some of the stocks here. There's the beaten down stocks, which we can use one of two ways. Beaten down stocks, you can play as dead cat bounce. Obviously, they're getting crushed and they're all going to put in good bounces at some point, which even if they go down further, they do bounce on the way down. And then also the dead cat bounce. So once the bounce fails, you can short those. I'm basically going to use the leveraged ETFs, but if you want, you can use the stocks as well. So we have the beaten down stocks that we use for both A and B type setups. We have the Corona plays, which we're mostly looking at relative strength. These are all stocks that are benefited by what's going on with the coronavirus. And then the usual suspects, the stocks we're always watching, that's the FANG stocks, NVIDIA, Microsoft, and then obviously SPY, QQQ. I could add Russell in here as well. I should have that in here, IWM. And then here it would be with the leveraged ETFs, and then financials and semiconductors, all stuff that we're usually watching, and we could apply any setup we see on those. All right, looks like SPXL is down to 20 now. We're gonna have to watch that a little closer. But let's go through some of these, some of this stuff here. Okay, a couple of people have questions about the dead cat bounce. You just need to look at SPY to have examples of the dead cat here. First move down, bounces to the 90 EMA and starts to fail. So short would be right in here. Then you had another leg down, an attempt to bounce, and then the failure here. And this is somewhere in here was a spot we shorted with the SQQQ and SPXU. And then here again, bounce, or wait, failure, bounce, failure. This was a tough spot to short because it gapped down so big, but these are all dead cat bounces right here. Bounces that fail, and oftentimes they will fail at support levels. Okay, let's go over some of these. We'll skip the usual suspects right now and go straight to Corona plays and the beaten down plays as well. All right, let's start with oil and energy. So we've got USO getting crushed here. Again, this could potentially at some point be a dead cat bounce if it bounces and fails. It's been tough to dead cat bounce this recently because it's just been going down. Maybe you could have done it right here because it gapped down so big. But here it could potentially be a rubber band at some point. We have XLE is going to be the same thing. We have BA. Look at how far this is to the downside, down to 90 from being at 300. We have UAL. This is a list you should have of stocks that are beaten down. So you should keep a beaten down list right now. Look at UAL. Nobody's flying right now, so obviously this one's tough. Some of the restaurants like Cheesecake Factory are getting crushed, obviously, because so many cities aren't allowing you to go there anymore, although they do have delivery, so maybe that'll help them. But anyway, look at how this thing has been crushed. There was a dead cat bounce right here, a potential dead cat bounce right there. BA, Win, and MGM, they have been shut down in Vegas and Macau, two of the hotspots for them. So obviously they are getting crushed. At some point, if these guys stay in business, they are going to be amazing opportunities when we're done with all this. I'm looking at the casinos very closely. Not to buy right now. First, we have to make sure they don't go bankrupt or anything. But when we come out of this, you can bet that I'll be making some casino plays. Royal Caribbean, obviously, and there's Norwegian as well we could be looking at. They are getting crushed, basically stuff that's directly impacted. Retail stores, Kohl's here, getting crushed. Macy's, these are all potential rubber band setups at some point. Tesla, Toll, so we can look at Tesla here. Tesla got some bad news today and it's testing the 200-day moving average. Toll housing is getting crushed. Nobody's buying houses right now. Housing is getting crushed. Nobody is buying luxury goods right now. So like jewelers, I'm sure Tiffany has been getting crushed as well. We look at Tiff. Yeah, so Uber. No one wants to sit in an Uber where everyone else has been sitting and no one's going anywhere. So this thing has gone from 41 down to 14. Maybe there'll be an opportunity in Uber, Lyft as well. So these are the type of stocks we're looking as rubber band candidates. You can even use the FANG stocks, but this is stuff that has been really beaten down. And these will also, Sam was asking if a rubber band doesn't bounce up, is that same as a dead cat bounce? Well, if it hasn't bounced, you don't have a dead cat bounce. It has to bounce or at least consolidate sideways and then fail. But these are things that these setups can go hand in hand in the sense that you trade it as a rubber band bounce, you get out at resistance, and then it fails, and then you can dead cat it. So you could be trading it long and then flipping it and trading it short pretty quickly. So these are all potential plays for that. Let me put up SPXL. I'm getting a little nervous about this one here. It's down to 1940. I'm gonna wait to see if it can hold 19. Okay, and then we have the Corona plays. So we have ZM here. We've already talked about ZM. We're in ZM. Clorox is skyrocketing, putting in a kind of an ugly candle here as the market is pulling back, but still showing extreme relative strength. GILD, obviously, they're working on drugs and Corona stuff and other drugs that'll help us. So obviously very strong. TDoc for work. Obviously, we have to use a lot of these kind of documents now. So very strong here. This is all stuff we could potentially playing. Netflix, this is a little surprising. I thought it'd actually be doing better, considering you would think subscriber growth has to pick up here. And then we have Walmart, Target, Amazon, Baba. We're going to be ordering a lot of stuff online. Baba. All right, so we've hit 19. I'm actually going to get out of, I'm going to watch it a little bit and then get out of Spxl. We've gone over most of what I wanted to go over today. We still have to go to the history today. What I'm going to do is I'm going to do another one of these tomorrow. So we're going to do these more frequently. I haven't gotten through everything yet, but I need to get to trading right now. So we're going to continue this tomorrow. We got through most of what we want to do, and we'll do the Q&A tomorrow as well. I'll talk to Josh and see what time is good for us to do it. But we're gonna have another one of these tomorrow, guys. Sorry to end it early, but we got to take care of some stuff here. All right, we jumped back up over 19. Maybe while we're up over 19. As long as we, okay, I'll keep going as long as we stay over 19. But if we go under that, I have to get out. Okay, stick around, guys. I think we're gonna keep going. All right, let's see if it pops above 1930. I'll feel comfortable. All right, we were talking about Amazon and Baba. Baba is China's kind of version of Amazon, so we're going to be staying home. We're going to be ordering online, and then Costco, obviously, huge lines at Costco. I actually thought Costco would be doing better. Dollar Tree, a lot of people are going to be losing their jobs, so they need cheap stuff. And I'm actually a little surprised this one's not doing better, but it's still holding up better than the market is. REGN, biotech company related to coronavirus, doing really good here. And CTXS, also related to working at home. So really strong here. So you can see some of these, you can't even tell that the market is tanking. Work. So a lot of people are using Slack now that are working at home. Has been showing relative strength. Has gotten hit recently. It's still a good thing to watch. And think of these Corona plays as our kind of like our Corona ETF that maybe you want to be watching, or you could even be building positions in a few of these as you might be shorting something else. Microsoft. I was thinking of Microsoft because of the video gaming aspect and documents, but I think it has held up better than the market, but still getting hit. And then Campbell's and Hormel, obviously, we're loading up on non-perishables, so these guys are doing good. Wrong ticker for Hormel, HRL. So we'll keep adding stuff to this, and I'm going to put this in our report. Whoops, I must have the wrong ticker here. HRL. There we go. Look how strong Hormel is. I think they're the ones who make spam, right? Which I have never had, by the way. Somebody in here tell me if they like it. Skype is big right now, which is Microsoft. Okay, yeah, Microsoft has obviously documents. They have video gaming. They have Skype. They have their own version of Evernote. I forgot what it's called. So I think that's a good Corona play. So we're going to think of this as our like fund or ETF of Corona plays. So I'm going to put this in the report, and we're going to start tracking this every day. We're going to start tracking our beaten down stocks every day, and obviously our usual suspects as well. So this makes it really easy for us. We don't have to sit there and watch, 5,000 different stocks. We just have these 3 areas we're watching to do these 3 things. So you see how easy we've made the decision-making process now. Okay, now let's talk a little bit about history here. There was a good article I found here going over, there's no charts in it, but if you just want to take a look at past bear markets, and then you can start go in and analyze the charts during that period. Obviously, when the Great Depression started, 1929 to 1932, and really we're going out to the 1940s and 50s here in terms of looking at the charts. But this is the most extended one, and who knows how this is going to play out. Is it going to be a quick bounce back like maybe 2008 was, or is it going to be this extended period where we don't get back to highs until 1950? from 1929 to 1950. So it's good to know all these different bear markets we've been through. So study 1929, the World War II, I didn't put that in there, but World War II, obviously. Then there's some other ones in here, the energy crisis. But the one I really like to look at is 1987. And then we have the internet boom and bust, early 2000s. And then obviously we have the real estate bust in 2007. All right, so Spxl is back up to 20. Awesome. So it paid to just be a little patient there so far. And I think what we did violate that level. Going back to what we're looking at now, yeah, we did violate that level. That's exactly what I want to see. It would be amazing today if by the end of the day we close up here. If we do that, I'm going to add some positions. So we'll see if that happens. But this is exactly what we've been wanting to see, is a violation here of that. Hopefully now we don't just crater again. But this is exactly what we wanted to see. Okay, so those are some time periods. I would go back. A lot of you are home right now. You got a lot of time on your hands. Go back and study these periods. You don't need to study anything else, because this is what's important right now. This is the period we're in right now. So if you study these, you're really going to have a good feel for how you have to trade through these periods. I've lived through, the internet boom and bust. That's when I started trading, and I lost my little baby account that I had at that time, which had grown to a lot. So if you haven't heard my story, listen to the Chat with Traders interview. I think it's on the Bulls on Wall Street site. But that's when I first started trading. I was in law school, ran 5,000 to 200 and lost it all. And that was during this period right here when I didn't know what I was doing. Obviously lived through the 2007, 2009 to 2018. And here are some charts. I just pulled these off the internet. I'll get some better charts out later where we really break down and analyze them. Maybe next week we'll do another mentorship session, and we're going to do a lot of these way more frequently now because I think we need to. But you can see 1929. Now notice here, this thing kept going down for 3 years. So the idea that this is just going to last for like 3 months or 2 months, and then we just boom, get out of it and just run, that's not a given. That is not a given. You can see here, this thing lasted for 3 years, but there's positives to that because in this, there are a lot of opportunities. And that's why I want you to look at this chart. Look at this chart very closely. Notice that even though we went down for 3 straight years, 1929 to 1932, there were some really strong markets, like mini markets in between. You had the big initial move. Think the market went down 50%. So, think about that. We're down 20 right now. It can go down a lot further. But then look, a 52% pop. So a lot of opportunity during this period. And then another 30% drop. So a lot of opportunities here to short. Then a 19% move. I mean, in bull markets, it's great to get a 19% move. And within a bear market, you're getting that. Another 28% move, another 31%. These are all up moves, 39% move. So this is the point, that don't think you're in this long-term bear market that there's not going to be a lot of opportunity for you as a swing trader. Obviously, long-term it sucks if your your 401ks, you're just passive investing. But for an active trader, lots of opportunities, not only to the downside but to the upside, because these powerful bounces that last months are in play. So study this stuff, and you're going to see there's going to be a lot of opportunity. This is 1987, which was quicker. This lasted about 1.5 years, maybe 2 years. But this was straight down. Then you had a W bottom, and then you basically went into a continuation pattern phase. So very different than this one, but also not so much. And what I mean by that is these powerful bounces, you can basically be playing our normal bull market strategy when you're in the midst of a powerful bounce. So this is just stuff to think about for the future. We're not in this mode right now, but it's going to happen. So, and we don't know how it's going to happen, but these are the things we're going to be watching for. Then here is this is just a long-term chart going back to 90s, just so you can get a picture of everything. This was the internet boom and bust here. And then you see the 2000 bust, and then the move up higher. Actually, this is a terrible chart. This is not, forget this one. let's skip to 2000 to 2018. This is better. You see here, we had the 2007. This was very quick, less than a year. And then we went back into bull phase and we had a bottoming formation here. But the point I want you to see here is 54% down. And we're at like 20, probably 25 now. So there is more room to the downside, even though we're way extended. So a couple of points here. One, we could come out of this very quickly, or it could take years. And for us, it doesn't really matter. We just have to be able to identify it and remember the different opportunities we have with regard to whatever happens. And the other thing is, don't make any predictions, and don't ask me to either. There's no dumb questions, but the questions that you probably shouldn't be asking is, hey, Paul, what do you think is going to happen a month from now? There's no way to answer that. My response usually is, I don't know what's going to happen, but there are 3-4 potential things that can likely happen, and I'm ready for any of those. And then we have to assess what is happening. Sometimes even as it's happening, you really don't know, but you just take shots in either direction and manage it with good risk. And then when you come out of it, you'll grind it out and come out ahead. Okay, so that's what I want to go over with you guys. We didn't have to end it today. We're back up to 20 here on Spxl, and Zoom is coming back as well. So we have time to do the Q&A now. So let's get to it. Ask your questions, guys. Anything you want to talk about. I think the best thing is to be focused right now on the market right now. Maybe any stocks you think are in play right now, or that you should be watching right now. Questions you have about what we're doing or what I've said today. Also, again, if you have any questions about just, what do I do now that I'm staring at the screen all day, or I'm at home all day? Stuff like that. Anything you guys want to ask, let's go ahead and do it. All right, Cindy, thanks a lot. Joseph, hey, Joseph, what's going on? Joseph is a long-time member here. Paul, with this much selling, when we get an upthrust, will the overhead supply be less relevant? Yeah, you should be, a great question, Joseph. You should be paying attention to overhead supply, but you'll find that in powerful bounces, sometimes we burst right through it. So pay attention to where resistance levels are. And there's a couple of strategies you can use. One, you can just get out where there is resistance and then get back in if you break resistance. So that's a strategy I like, or you can kind of partial. Nick, you put UWT question mark. Obviously, if there's a potential trade in USO, you could do UWT. It will get reverse split most likely. A question that's been coming up, would they end it? And we don't know. They have before. So, UWT used to be a different ticker. So it is a little risky. Maybe you want to use USO. So there's no definitive answer on that. And again, if you want to be more safe, you could use USO, or you could just go to energy and trade a company that you think is safe, like Chevron or something like that. But yeah, there is some risk involved there. What about ticker SGMS, since it is gambling? Yeah, SGMS has been getting crushed. I loved this stock when the last year when the federal government allowed states to implement sports betting. I love this stock, but obviously, because of the environment right now, it's getting crushed. Eventually, there might be a good opportunity again if it stays afloat. But you could definitely put that on your rubber band list. Why? Yeah, that's interesting. Who knows about the why? Gamble Man. that's I don't know what your real name is, but he goes by Gamble Man here. Grub. This is one that actually, let me add that to our let's add that to our our little Bulls on Wall Street Swing Coronavirus ETF here. And the reason I hadn't initially put it on the list because it wasn't showing relative strength, but you would think it would be, and I honestly, I don't know why, but it's not. But yeah, you would think people would be ordering out. I'm a little scared to order out just because people are making the food. So maybe a lot of people are thinking like that, which is why. All right. Do you do anything different when trading leverage ETFs? When you're trading the leverage ETF, first of all, one difference is I'm not basing my strategy in terms of support, resistance, moving averages off the leverage ETF because they're mostly trading off the underlying. So the underlying is what I'm paying most attention to. So there's number one. Number two, you have to trade a little smaller and you need to use a little bit of a looser stop because of the extra added volatility. Okay, GASL, natural gas. I keep hearing that there's a play in natural gas right now, and I took a look because some people I respect were talking about it, and I just don't see anything here at this point that looks very strong for this. But it could be uh, a rubber band play. I would not touch it at 8 cents here, although there could be an amazing opportunity upside if you're willing to risk a little bit. I think, what is the underlying ticker? NGAS. Let's see here. If someone knows it, just shout it out. What is the, oh, UNG, yeah, UNG. And UNG is at 12. Maybe if you want to be safer, just trade UNG. Yeah. All right, Donald is a new member. Just saying thank you for the service. Thanks a lot, Donald. Welcome. Happy to have you. And if you have any questions, let me know. Do you have any particular scans for the rubber band setup? I do. It's really not necessary right now because everything is getting crushed. And I really, if anybody who knows me knows, I'm not a fan of scans. I like to put in a little bit of extra work because I think it's really important as a swing trader to have this overall broader picture of what's going on. And as you go through charts, you do that. Whereas if you have a scan, which I used to do a lot of scanning before, but when you have a scan just spitting out specific things, you lose that feel for what's going on. But some very easy things you can do outside of scanning is just take your watch list. Like this is my watch list that I've been building, for the past, 2-3 months, and I just filter it out. Like here, I've already done the filter for the last 30 days, and I know which of my stocks are doing the worst. These are obviously going to be rubber bands here, and you can see some of them that were on our list: Uber, Cake, Toll, Kohl's, all these guys, Win, Lyft, Sig, BA. And then you can see You can see relative strength the other way by looking at the top of the list. You can go into FinViz and filter out for stocks that are the most above their 20-day moving averages or the most below. You could also use their RSI. And then we have specific scans in TC 2000. I think there is, I don't ever go into it, but I think in the chat room, there is a room here for scans somewhere. I thought there was. I saw a mention of a lot of scans the other day, and let's see, general. I thought there was. Maybe it's been taken out. But if you need a scan, Kunal likes to do a lot of scanning, so you can ask him. If you really want a TC2000 rubber band type scan, shoot me an email and I'll send you one. Is it a good idea to take swing position in SPXU and or SQQ intraday? Great question, Jason. Wait, okay, let me make sure I'm after SPY failed high of the day. I asked because all these failed breakdowns failure. Yeah, you could do that. Take a little shot when you see intraday failure. Just don't risk too much. And you can always get out of it by the end of the day or leave it on if it's really going in your direction. And I do a lot of strategies outside what you see me doing here. Obviously, I do a lot of day trading as well. But because we're catered here for the swing service to standard swing and people who are trading part-time, we're not talking as much about this really super active type of trading. Eric, did you not use stop losses in 2000? I did not. that is when I first started trading. I was in my early 20s in law school, had no idea uh, what I was doing, and back then was very different than now. Internet was just starting out, access to information was not there. I got my information by going to bookstores and hanging out with the older guys at Charles Schwab. I'd have to go there, and a lot of times that's how you had to place your trades. You had either had to get on a phone or you had to actually go over to the broker and make a trade there on their terminals. So it was like a different, it was like the Stone Ages. So yeah, I did not use stop losses back then. All right, Faisal, I hope I'm saying your name right. Uh, Great session, thank you. What was your setup for the Spxl trade? That was the rubber band setup. So basically here, very beaten down, and we had the reversal candle here. So this is a standard typical rubber band. Obviously this market is a little different. The one thing I will say, and why I didn't get aggressive was one, because obviously the environment we're in, but two, my favorite rubber bands are again when they are violating the support level. And we talked about this the last few days that we weren't quite there yet, but we still would take that shot. But now we have violated it, and I would love to see a trigger here today. If we put in a hammer today, you can bet I'll be adding a couple of positions. All right, Floor, I hope I'm saying your name right. Thank you so much for your guidance. Appreciate the calm. Yeah, that's really important. Stay calm. You really can't control what's happening. You can control yourself, and you can control the decisions you make, and that's all really that we can really control. We controlled our decision yesterday to take this trade. Obviously, we can't control the price action. Thoughts on RAD as a snapback? That's from David. Let's see here, Rite Aid, and let's add Rite Aid to our list as well. I don't know how I missed this one. Great find here. RAD, we should definitely be watching this one. If you wanted some protection, you could jump on this as a relative. With the relative strength plays, as long as you have good risk reward, the setup isn't quite as important. We are breaking a high here. If I was entering, and I can't give specific trading advice that goes into financial advisor type territory, but if I was looking to enter, I think a good strategy is if you enter here, use a very loose stop, a lot of volatility. So I would position size to where like I put my stop all the way down here at like 13. So I'd give myself 5 points here. Okay, Michael, you're asking for the layout. Are you talking about my swing layout? So if you want the swing layout, you need to email me, singjd1@aol.com. You need to email me your TC2000 username, and then I can go in and through TC2000 send you my layout. This is the swing. My favorite swing layout is this one, and this is the day trading layout I use right here. So if you want these two, just shoot me an email. All right, Gamble Band's name is Max. All right. I know stochastics or Bollinger Bands. Yeah, you can use stochastics. We really don't need them to be able to identify that the market is very extended right now. But yeah, if you feel comfortable, beginning traders, I definitely recommend using something like stochastics as an oversold, overbought guide. What do you think about short-term swings like overnight day trade style with strong virus-related stocks? As long as you're trading small, I think you can do that overnight. I've been doing some of that. But again, obviously, I don't do that with you guys here. Your thoughts on Starbucks? Their stores are staying open. I actually, great question, Barath. I actually thought about putting that on my Corona list, but I wasn't quite sure. But I am watching Starbucks, and it's not doing well. It's basically a rubber band setup right now. So that's part of the reason I didn't put it on the Corona list. Everything I put on the Corona list is already, even though logically I might say, hey, this should do good in a Corona environment, the chart is not saying that. So everything we put on the Corona list is stuff that is actually showing relative strength. Okay. Floor is asking, in the last few days, I've been able to look at the market on an intraday basis. How do you manage to focus with kids interrupting? Great question. I've set rules for them. When daddy's at the computer, he's working, but if it's something really important, they can come to me. Occasionally they have little squabbles and I have to get up and deal with them. But one thing I've done is I put them on a strict regimen. So we have a whiteboard. They have it laid out. 8:30 they have to eat breakfast. By 9 o'clock they have to be reading. By 10 o'clock they have free time, do whatever they want. Noon is lunch. 1 o'clock we're doing piano lessons, so they're doing that. So we pretty much have a structured schedule, and then they also know that they can only bother me if it's really important. And then I check whenever I have a little break, like right after this, I'm going to go check on them. Guild is definitely a relative strength stock, Gabriel. Good one. John, can you explain your gap down exit strategy? Yeah, I thought, we've gone over it quite a bit. And I also did you guys haven't seen it already, maybe I should post some of the blog posts in the chat. But you guys should definitely take a look at this blog post, what to do when your stock gap's down below your stop. I think this will answer a lot of your questions. I put there's a little video in here as well. But when a stock gaps down below our stop level, as it recently did with, my mind's blanking now. Let's use Goldman Sachs as our example, our recent trade. So Goldman Sachs here, boy, my mind's a blur now. I don't even remember the days. I think I entered here. Yeah. Okay, so we entered on Friday at about, I think it was, numbers might not be exact, but I think we entered around 168. We got that fantastic pop at the end of the day. I was feeling really good going into the weekend, and then boom, we gapped down right at or below. Stop level was 157, and we opened at 150. So how do you handle something like that? First, almost every time that happens, I am taking my stop off, because we've seen this time and time again, that oftentimes that is the low of the day. And if it's not the low of the day, at least there'll be a reflex bounce where you can get out at a better price, which is what we did. But you do have to have a max loss strategy. You can't hold on forever or you're going to get crushed. What if this thing had kept sliding, right? If it went down to 140, I would have gotten out. Now, it's subjective. There is no hard and fast rule of when you get out. You have to think about your own account. You have to think about your own willingness to risk. You have to think about the stock. Is the stock coming into any major support level that you could potentially use? I was looking at this range down here, that our stop was at 157, but we were coming into this 152 range, and we violated that a little bit, but maybe it could hold that level. So all of these things went into play. Obviously, then it bounced back up, got back above our stop level. And once it got back to our entry point, I made the decision now I can't risk another big gap down. So if it gets back, I could have made it 157, but I made it 160, that, if it hits 160, I'm going to get out. So hopefully that answers your question about how we're doing it. But the basics of it is, when you get that gap down, watch to see if that level holds. Give it a little bit of room, because it's not necessarily just going to go to that level and just go straight up. Give it a little room to go down. If your risk is getting too much more than it already is, you have to have a line in the sand that you will get out. Should my bias be towards dead cat bounce? You shouldn't have a bias, Sarab. Just trade what you're seeing. So if you're getting strong bounce signal, take that. It's tough to have a bias for a dead cat bounce when you're so extended to the downside, but essentially just take what the market is giving you. Is now a good time to pick up airline stocks? Bharat, I'd be very careful. There's this tendency, people have been saying this for a while now. I mean, it looked like an amazing opportunity. Like UAL was at 88. So when it was cut in half at 44, I just got a message that my internet is a little slow here, or the GoToWebinar is I'm having issues, so hopefully you guys can hear me okay. But it always seems like a good opportunity at every spot here. Maybe if you're willing to hold, if you're talking long term, and we're not focused on that, we're focused on swings. But if you're talking long term and you're willing to hold down to 5 because you know in 10 years it's going to be back up to 50, I guess, and I can't really give you that advice. But I only enter these things off rubber band setups for swing when we have a good signal, and right now we don't have one. Now today, I'm getting a little tail here. If by the end of the day it closes up towards the top of the range, then it will be a good signal. Barath, okay, longtime member, Bay Area local, and 49ers fan. All right, I grew up in the Bay Area. I still have a bunch of family up there. Where are where are you in the Bay Area? Michael, sorry if you talked about this already, but are you using T2108? At this point, great question, Michael, and you know I haven't talked about it in a few days now. The T2108, which measures stocks under their 40-day moving averages, is at extreme levels, and we know that, and it really doesn't matter now. We just know we're at extreme levels. One thing I find really interesting, though, and I'm really glad you brought this up, is as the market is going down, T2108 is holding and has actually already made a low. So that's interesting. Look at this. It made a low 312, yet on 312, SPY was way up here. So as SPY has been going down, T2108 has been slightly going up. So that's a little positive news. That's telling us underlying some stocks are actually doing decent. So that is a positive here. So that's the way I'm looking at it. Not necessarily as oversold now. We know we're at extreme oversold levels, historic, but that little divergence is really interesting. And I actually should have brought that up in the lesson here for today. When do you enter your swings? Donald's asking. Usually I don't care, beginning, end of the day, but when we're in a volatile market, especially this type of market, so many fake outs that I'm waiting till the end of the day, usually. Julio, what's going on, Julio? Don't recognize your name. You must be a new member. Remember, guys, a lot of names here I don't recognize, and I haven't seen you in the chat. Get in that chat room. Do you enter? And I know a lot of you will watch, but it's great to participate too. Do you enter close swing trade positions during pre-market or after? I've been getting a lot of questions about this. I tend to. It's very rare for me to get out pre-market. You're often getting out at the worst time. A good example of that is Goldman Sachs, and at that same period when we were in SPXL. Got a lot of people telling me, "Oh, I'm getting out pre-market. Why aren't you getting out pre-market?" And as you can see, we got out in a way better position during market hours than we would have pre-market. Michael, thank you very much. Love having you as a mentor. Awesome. Love helping you guys out. David, can you send me a template just showed at 157 with all the windows? I don't understand the question, David. You want a template of the layout here? Just shoot me an email and I'll send you it with your TC2000 member name. Gabriel's asking, in a bullish market, do you trade rubber bands? Yes, I do. Maggie, what's going on? Haven't heard from Maggie in a while. I've worked with her very closely. Is it a good idea to use a 1 hour time frame? I'm not doing a lot of that. Maybe if it helps you with some near-term support and resistances. Barath is in West San Jose. I spent a lot of time there recently, but grew up on the other side of the Bay Area. Carolina is asking, is decreased volume the last few days any type of signal? Not really. It is still a lot of volume compared to before. The market can't sustain this kind of volume. So I don't think the volume is a big deal right now. You're welcome, Julio. Nick is asking, is T2108 just a TC2000 ticker? Yeah, it's not on Thinkorswim. It's their own. They have their own. All these T2s. They have a T2 starting at T2100, and their advanced decline line. You can see here they have a bunch of different ones. Stocks above their 200-day. We could also look at. I like the 40-day, but they have the McClellan oscillator. But yeah, these you're not going to find anywhere else. Now, if you go on stock charts, they use the 50-day. So on stock charts, if you don't have TC2000, you can go to stockchart.com, and they have one that tracks the 50-day. Peter is asking where you'd enter SPY. I don't know that right now, but remember, we're watching the support level here. And if this support level holds and reverses and remounts, depending on the candle, we'll look to enter. And I think that would be somewhere up here. So getting up here would put a nice hammer candle. I think maybe 243 or above, I would look to enter. Then obviously, if it breaks down below and stays below this level, that changes things, and we're going to have to kind of rework the strategy. Now, another question would be, do we put on a short here because we are violating a major level? Oftentimes, you get this little dip, and it lasts a few days, and then we remount. We still could take the short here and play for another move down. There is risk, though, that we get stop gunned or we remount here, but it might be worth, and we're very extended to the downside. I really don't like putting on shorts when we're already extended to the downside, because the thing is, even if it goes down, keeps going down, you have to deal with powerful bounces. Like, look at this. Shorting here would have worked technically because, it was at 248, you'd be at 230. But could you have held on through this big bounce that went from 248 all the way to 272? That's why it's so difficult to short at extended levels, and why I like to short in this spot when we get a bounce that's failing. All right, guys, that looks like the extent of your questions. Amazing session here. You guys asked a lot of fantastic questions. One last one here. Is gold, how come gold is inverse compared to the market? Gold is a flight to safety. So, and it's interesting that gold is not acting as good of a flight to safety as it has in the past. It's getting crushed here, which it actually did in 2007 as well. That tells us that even the big guys are even afraid to put their money in gold, which usually they dump towards when they jump towards when they get out of the market. But it does tend to do well when the market is getting crushed. All right, guys, fantastic session. Remember, we're going to do more of these. Wait, Davey asked a question. I know Davey really well. Why no VIX play? I actually have, again, not everything I do is what we do here. The reason I didn't do it in the report is because it's so volatile, so risky, and when I've done it in the past, traders have had issues with it. But I have been trading VIX. And if you guys are looking for something, remember, in bear markets, VIX does really well. All right, guys, fantastic session. We're going to do more of these, maybe even a couple a week, where we usually do maybe 2 a month, because not much changes and you get enough from the reports. But I think this is a good time to step it up and do a lot of these. If you have any questions at all, shoot me a message, singjd1@aol.com. Let me write it down here. You guys already know this anyway, but it's singjd1@aol.com. Any questions you have, anything you need. And of course, get in the chat room. You can ask anything in there as well. And, Kunal jumps in there as well, too. So you get a lot more feedback, and from other traders as well. So this is the strategy we're using. Put it into practice. I hope this really fleshed it out for you guys, and you guys know now exactly what we're looking to do. All right, guys. Talk to you soon. I actually still have to put out the report today, so we'll do like the later intraday report, and we'll talk soon. All right. Stay healthy.